Hey everybody, not sure if we're streaming yet. Hopefully we are, but I'm just gonna go ahead and get started. Looks like maybe a couple of people actually just signed up. So I'm Chris, Safe Harbor Stocks. I put this is really unannounced just in the last 20 minutes, so you may not get many people showing up, but it will be recorded and posted on the newsletter, safeharborstocks.com. But I just wanted to take time, because there's a lot of action in Amentum shares today, and I wanted to take time to just go over the quarterly results and take any questions if anyone has them as well. Feel free to put any questions you have in there in the chat if you have access to it. I don't know if it's that way on X, but on YouTube you should with the YouTube link. So let me just get started, okay? Some of you, I don't know if many people had time to listen to the earnings call. The transcript is already up, at least on Koifin it is, but I just, I was on the actual earnings call and listening to it as it went this morning at 8:30. And I had taken some notes, put some things on Twitter. There were some things that I thought the earnings release, the results that were published last night were pretty good. They were as expected, but there were things on the earnings call that I actually liked that made me feel stronger and like this about the stock better. So, and I wanted to take some time, go through some of those. So we'll just go through the slide and talk about a couple of these things, a couple of points. So this is the first real quarter they're reporting where they have good year-over-year comps, where they're showing year-over-year for the quarter on revenues and everything for the combined company with Jacobs and Amentum together. And they one thing is the backlog. They have 45 billion in backlog, and the book-to-bill was 1.1. So there were some companies that were like I can't remember which ones they were, but Booz Allen maybe and Eldos, a couple of those that actually had low book-to-bill under 1. And so it was helpful to see this, and I know that definitely helped with the shares coming up. And today, everything else is pretty on track. There wasn't anything to call out that I thought was negative. The only thing I noticed in the earnings call they mentioned was something about there being a potential 1% hit to guidance, which really is not a big deal, I don't think. And related to space, if you look at the guidance here, they have 13.8 to 14.2 million. So I mean, a 1% hit for the year, if that happens, is still gonna. It's not even gonna jump outside of the range. But what else we have? So here's the backlog into book-to-bill. One of the things I posted on Twitter, which I thought was pretty significant, the West Valley demonstration project. So they were awarded $3 billion from the Department of Energy for the single award IDIQ for 10 years. So that's up to $3 billion. That doesn't mean they have that much revenue over 10 years, but they can get awarded up to that much. And one of the interesting notes about that is that those don't show up in the revenue until the revenue is actually booked, and it doesn't show up in the backlog either, because those IDIQs are typically don't show up in backlog. They're more awarded as they come. So even though the backlog went up slightly, you still have a lot of other IDIQs like this that really I think bolster the stock and give it some more strength longer term. And I talk about that in the some of the newsletters. There's one on IDIQs specifically that talks about that. And another thing I think worth noting on this slide is they submitted $12 billion for competes for bids for jobs and contracts in the quarter, just in the first quarter, and they're planning to do 35 billion for the whole fiscal year 2025. Something else that if you read through, you'll kind of see where it kind of makes sense. You see the book-to-bill was a little low last quarter, and going through the prospectus from last year and everything, they were pretty much trying to the book-to-bill, I believe, was a bit lower because some people were being concerned about that, but it's because they're repurposing some of these contracts, right? The merger, there was some overlap between Amentum and the old Jacobs CMS. They didn't have, they had some overlap. They had some contracts, that were sort of combined, and they needed to also, with the merger work, takes a couple quarters to really find the more profitable contracts to bid on. So I think there was a little bit of a trough there last quarter. At least that was my sense. And I think we're starting to see sort of a reemergence of kind of what their normalized submits are, and maybe what more normalized bookings and revenue would be going forward. So I thought that was an encouraging sign. And let's see what else. I don't have to go through that slide too much. And if anyone has questions, you can drop them in the chat. So I see we have viewers. We have plenty of viewers. So, and apologize if I can't view these. This is my first time using this app. So if somehow I'm missing them, I don't know, maybe you can let me know. But you see Q1 fiscal year 25 performance. Revenues are up a couple of percent. EBITDA is up a couple of percent. One thing I want to call out, I think, on this slide is the adjusted EBITDA margin at 7.7%. And they were, about a year ago, probably the combined company was around 7.3, 7.4. Last quarter, they came up maybe 20 basis points, something like that in their margin. And it ticked up again, another 10 basis points. So that was good to see. That also dropped their net leverage by slightly without even paying down any debt from that EBITDA increase and the margin increase. And they expect, on the call, they mentioned they expect a little more slight expansion on the margin, but it's going to be more in like 26 when they see more expansion, maybe above 8%. They didn't use the number specifically, but I know in the deck a couple quarters ago, they mentioned 8.5 to 9% is more of their longer term target over the next few years that they'll get to for EBITDA margin. So there's that's one of the levers they kind of have to pull. That's kind of adding kind of fundamental growth to this underneath the surface. And they did have, obviously they have some interest expense. They do have a fair amount of debt. And actually, I'll talk about that a little bit later because there's another slide on that. And a couple of things they know, both segments were actually strong. And they mentioned this on the call. This wasn't on the slides or in the materials, but it was mentioned on the earnings call. The book-to-bill actually was over 1x of both segments for digital solutions and also for global engineering solutions. So, and 2/3 of the bookings or awards, if I heard it correctly, was from new business. So those are really promising things to me, I think. So in both of these segments are kind of running on full steam. And, those are definitely positives, especially you had some other companies like Booz Allen and some others that had lower book-to-bills. And there's a little bit different. They're peers, but I wouldn't say they're necessarily very close peers, but they're probably the closest peer evaluations that you can make in the industry. And so here's a little more about the debt. So their gross debt is pretty much the same as last quarter. They didn't pay anything down. I was hoping to see them pay a little bit down this quarter, but based on the call, it's nothing that really concerned me. Their leverage came down from 4.1 to 4.0, again, from the EBITDA increase that they had. And they have a good cash position and liquidity. As you can see, they have undrawn $850 million. So they are going to be paying down debt this year, and some of that is contractual, where they have to pay down on per the contracts. So that will also help going forward. And I talk about more of that in the newsletter write-ups I have. So, but cash flow, pretty much getting to the full year guidance, they pretty much reaffirmed. So everything you see on the slide here is pretty much identical to last quarter. The revenue range, the EBITDA, the adjusted EPS, and the free cash flow. A lot of the key assumptions as well. One thing I mentioned, I think, on the adjusted EBITDA being the same, the guidance. They haven't paid debt down, but as their EBITDA comes up, that leverage is coming down, and I'm seeing about actually 3.9 times net leverage. So because they have the debt, they have 4.76 million, and then they have a little more cash. So that's actually reduces their net leverage even a little bit more. And then let me see what else there is. So I think that's all I had for the slides. There were a couple things I wanted to mention, other notes I had from the call. And let me see here. Not sure if getting any comments or not. If we are and I don't see them, I apologize. It's not showing up in the app. But what I wanted to mention on the EBITDA margin, I talked about that. So there's a question on the call about headcount at government. An analyst had a question on that and the impact with Doge and everything like that. The CEO really reiterated that the government has a mission on a daily basis that's not really changing. You have the country operating the way it is. They needed to deliver the scope of work in a more efficient way. So Amentum is more positioned to do that as they get attrition and pay out severance within employees on the government payroll. They can use firms like Amentum to handle the work more efficiently. So they're not really seeing they're not really seeing any change in that. And it's the way they deliver the work, kind of more efficiently that really helps. Especially they talked about Intel, space, even Department of Homeland Security. The quantity of work they need operationally is not really changing. And the guide, which I thought was important on the call, the guide, they said they're not seeing anything at this time at the moment that affects the guidance. That was a disclaimer they always made and last quarter as well. There was a specific comment, a question on the call about Doge and if there's any slowdown, and they haven't really seen any slowdown with Doge. With the payments, with the processing, things like that. They, if anything, they see improvement. They see potential improvement for more of these deals, especially in space, intelligence. Lost track of my notes there. Things like that, and also. So I'm jumping around a little bit, but I'm just going through the notes as I took them. They're doing more things on the commercial side as well. So they have, 80-90% of the work is government work, but they're also working on commercial enterprise, working with some auto companies, integrating some aerospace advanced technology they have, assisting that with more utilization. Same with industrial companies with integrated infrastructure. 5G technology, helping some of those communications companies increase utilization of their assets. So some other verticals where, and they talked about this in presentations in the past year, where they're looking to build out, especially they have more capacity and synergy working with these two merged companies, which is essentially double the size of what they were. And what else here? Their priority, they're seeing, they're not really seeing more on the government side. They're not really seeing any delays in awards. The executive orders that were passed down from the Trump administration, they're not seeing any disruption from that. So obviously that was helpful to hear that on the call. I didn't really hear anything that was negative. Other than the potential 1% hit to some of the contract work on revenue, but there seems to be plenty of growth to handle that, to offset it. They talked a bit about NASA as well. That was another analyst question, and I actually learned a little bit more on there too. The CEO Heller came out and talked a little more about what they do with NASA. They do a lot of work with Kennedy Space Center. They're really engaged in the high priority missions there. they're seeing zero impact from from any of the work there. They're doing a lot of work on the Artemis missions. They have and they believe that really aligns well with the new Trump administration, right? Space exploration, it's really a strategic objective for the country and for Trump. They're at the Kennedy Space Center. They're working on the Moon to Mars, the Move to Mars mission, and Artemis is a big part of that. What they're doing there is handling a lot of the hardware for the Artemis missions. So there's a lot of work there. There looks like a lot of visibility and runway for that. Things like working on satellites, information systems as well. For the space exploration, and it really supports the commercial space industry as well, directly through NASA. So I think those are the big parts, notes I made to the call. The biggest highlight, I think, is there was no delay in any of these rewards or any effect from guidance on the executive orders that were passed down by Trump. And so I guess, let me see here. Give me a minute quickly. I wanted to see if I can see the stream, so make sure there are no comments over there. Give me a minute.
And in fact, like the Substack feed or the Substack ecosystem is the wrong place for you to be playing.
I'm not seeing anything there. I can't get to it, but I don't want to hold up the feed too long. But I'll pop through a couple of other slides. So if you look through the transcripts, I use Koifin. I know the transcript is already available, so I was pretty. I think it's pretty impressive, even in this day and age, that the transcript is already available, and then you can take a read through that. So I actually just listened to the call live, but there are a lot of the stuff I covered is in there, and then have the earnings release, and I could post these later as well. And then I guess the final thing, I'll just show you the site where I have some write-ups here on the Safe Harbor Stock site that I have done. And this is the first one I did back December 17th. So you can see a lot of the information on the write-ups there. And what you can even do is you can go to deep dives or even just search Amentum. And you can kind of see all the posts that are there on it. But there was a couple I did on IDIQs, and here's one on sort of the IDIQs. So you can look at some of the other articles on that talk about those. So again, I say, one of the I think helpful points is they're very IDIQ heavy with a lot of their work, and what they that doesn't show up in the backlog, and it doesn't show up in the revenue till it's really booked. So that is something that's helpful to know. Let me see if I can find this YouTube feed, because it says we have plenty of people in, and I want to make sure there are no comments in there that I'm missing. Can anyone? Let's see here. Apologies, it's my first time using this. I'm using StreamYard, so I don't know if anyone's ever used that before, but so it's my first time using it. Let me just figure this out. I'm just going to go to my channel's homepage, see if I can find something in there. All right, not seeing anything. So I guess I'll wrap it up there. And this will be recorded, so I'll post this on my newsletter, sort of to accompany the write-up I'll do on the earnings, as maybe some people like to read it as opposed to listening. But I just wanted to get some of these out because there was quite a bit of action in the stock today, and I was talking to some investor friends actually, and it opened like 10%, and then it came down, quite a bit. I think it was up near 22.40. It came down to like 21. I was, buying, and I made some notes on the group chat and things. I was buying, through the morning, probably around 21.70 or so, sort of as an average. But it's another good case, which, I talk about a lot as well in the newsletter about FOMO and fear. So it was like fear in the morning, there was FOMO, then there was fear, it got down to 21. I know some people were messaging me like, sort of what are we missing? And, it's a good opportunity to buy. So it's up higher near 23 now. So it's been good. I'm a little surprised that the other peers in the industry are not up as well, but it's Amentum is sort of more of a lesser known name at this point. And, sometimes they each tend to operate sort of on some of their own metrics and their own reports. Some of the other companies, the other peers didn't really have the best book to bill ratios. I know that Jay or a couple other people on Twitter were mentioning that as well. So that makes a difference too. But I'll wrap it up there so it doesn't get too long. Try to keep it around a half hour. And I'll try to do more of these if people are interested. So hope to do one of these again, and look forward to hearing comments and feedback later. So thanks, guys.